Hello and welcome to my channel Wonders of Price Action. This is the monetary policy of Reserve Bank of New Zealand that was published on the 29th November 2023. Now we are going to through this and try to understand this. Interest rates are restricting spending in the economy and consumer price inflation is declining as is necessary to meet the committee's remit. However, inflation remains too high and the committee remains wary of ongoing inflationary pressure. What did they do? They did not increase the rates. What did say here? The Monetary Policy Committee today agreed to maintain the official cash rate at 5.50%. As they did not increase, what are they telling? The reason of not increasing is the interest rates are restricting spending in the economy. They need some money to put in the economy, and interest rates are, and consumer price inflation is declining, so they did not increase the rates. Still they say, however, inflation remains too high. Still too high. Now internationally economic growth has been stronger than was expected at the start of this year, but remains below trend and is likely to slow further. This subdued growth outlook will continue to restrain New Zealand's export revenues. Outward, this was the reason, this is the reason they also did not increase the rates because that will uh, put pressure on their exports. Now, what is next? In New Zealand, demand growth has eased, but by less than anticipated over the first half of 2023, in part due to strong population growth. It means population is increasing. The OCR will need to stay restrictive, so demand growth remains subdued and inflation returns to the 1 to 3% target. Wage growth has eased from recent peaks. Demand for labor is softening, with job advertisement now below our pre-COVID-19 levels. At the same time, strong inward migration is increasing the population and adding to labor supply. Where is the population increasing from? From the migration. And they are supplying the labor. It is the reason that the labor is now available. While population growth has eased supply constraints, the effects on aggregate demand are becoming apparent. This is increasing the risk of inflation remaining above target. They did not increase the rates, but again and time again they are focusing on inflation. The committee is confident that the current level of OCR is restricting demand. However, ongoing excess demand and inflationary pressures are of concern. Given the elevated level of core inflation, if inflationary pressures were to be stronger than anticipated, the OCR would likely need to increase further. Here they are showing that they are expected to increase the rates. This is making hawkish. This is the hawkishiest. What do I say? More hawkish. Most hawkish. Yes, this is the most hawkish sentence currently that we have read above. If inflationary pressures were to be stronger than anticipated, the OCR would likely need to increase further. The Monetary Policy Committee agreed that interest rates will need to remain at a restrictive level for a sustained period of time so that consumer price inflation returns to target and to support maximum sustainable employment. What means that they are not going to decrease the interest rate, even they could increase. So here it is the hawkish tone. Now this is the summary of record. Now let us see whether it is of use or not for us. The Monty Policy Committee discussed recent developments in New Zealand economy. Global, okay. Prices of New Zealand's exports over then. Now here we have to watch here. Global economic growth remains below trend as high interest rates weigh on demand. Easing global demand is placing downward pressure on New Zealand exports, and exports revenues are lower than in recent years. However, global prices for some products, such as dairy, have established in recent months. Members noted that to date, global growth has been stronger than was expected at the start of this year, supported by sustained strength in the US economy and a recent lift in economic activity in China. However, going forward, subdued global growth is expected to restrain demand and prices for New Zealand's exports over the medium term. It means they want to increase the rates, but just due to the exports, they are keeping themselves uh, away from increasing the rates. They are eager to increase the rates, they are not decreasing the rates. The reason is that is holding them from the exports. They don't want the exports rates to go higher. The committee discussed international inflation trends. Globally, headline inflation continues to fall, but there are differences in both the timing and magnitude of these declines across countries. Housing rent and inflation is an important source of difference in services inflation across countries. With greater upward pressure in economies, experiences is net immigration such as New Zealand and Australia. There are high immigration in New Zealand and Australia. The committee noted that long now in discussing global financial conditions, the committee noted that long-term interest rates for government debt have increased, largely in response to the rising volume of public debt. More recently, interest rates have decreased as financial markets anticipate the end of the phase of monetary policy tightening by major central banks. Members also noted that most major central banks have indicated that they intend to retain current restrictive policy rates for longer and are willing to tighten further if required. Means they will follow them. The committee discussed recent domestic economic developments. Growth in parts of the economy is slowing. There has been less of a decline in aggregate demand growth than expected earlier in the year, as was noted in the October review. GDP growth in the second quarter of 23 was higher than expected, while growth in the first quarter was revised up. This is positive for New Zealand as NZD. Consumer spending growth is broadly easing, but some areas of services spending remain more resilient. On an aggregate level, consumption is being supported by the strong growth in population, whereas on a per capita basis, consumption is declining. It means overall consumption is increasing, but individually at households and even per capita basis, it is decreasing. Members noted that the net immigration has never been higher than previously assumed. Members noted that net immigration has been higher than previously assumed. Why people are so much interested in New Zealand? This has increased the supply of workers into a tight labor market. However, the demand side effects are becoming apparent. Strong population growth has contributed to an increase in housing rent. Rent increases and any increases in construction costs in response to greater housing requirements affect inflation directly. This will affect inflation directly as rental prices and construction costs are accounted for in the consumer price index. Members noted that it means CPI will increase. That will be the positive for NZD. Members noted that the outlook for residential investment was currently muted despite the surge in population growth. Due to the cost, this is house prices. Okay, annual headline inflation was lower than expected in the September 2023 quarter. This was accounted by lower inflation for tradable goods and services. Members noted that tradable inflation can be volatile and cannot be relied upon to achieve their inflation target. Non-tradable inflation is easing only gradually, and while all measures of core inflation have declined, they are still elevated. In discussing the labor market, members noted that the underutilization rate and unemployment rate both increased in the September 2023 quarter. Population growth has increased labor supply as seen in the decline in surveyed measures of labor shortages. As economic activity slows, labor demand is also declining. Why, with job advertisements falling to below the pre-COVID-19 levels, wage inflation has eased. Members noted that while pressure in the labor market are easing, it is still tight and employment remains above its maximum sustainable level. Now I am concluding it here. Let us see whether they have concluded it. Now the tone is hawkish and the growth. Three things here show us. One is growth. The GDP growth is good for New Zealand. This is positive for CPI due to the high costs of houses. It is positive for uh, NZD. So there are, though they did not increase the rates, but they still uh, can increase. They are keeping their monetary policy restricted. So the conclusion, this policy maintains that New Zealand dollar NZD is hawkish. Reserve Bank of New Zealand is hawkish. Like my this video, subscribe my channel. Thanks for watching. Bye for now. I'll be coming in the next video with another analysis. Bye.